How's it going, everybody? Estas here. So today, like we do every single Sunday, we're going to break down the game plan for this upcoming week in the stock market. We're going to go over some stocks I'm looking at, charts I'm looking at, my thoughts on the markets, and overall what I'm waiting for this week. So sit back, relax, take a sip of your coffee, smash that like button if you guys find value, and check out my Patreon down below if you want all my real-time buys, sells, call-outs, morning update videos, plus more. All of that's on Patreon, link down below, and let's get right into the video. So you guys know at this point, the markets have not been pretty. In fact, they've been hideous. They've been very ugly. It's been a disaster out there for the past couple of weeks, pretty much all of September. And what did we do in the beginning of September? We made a video going over how, historically speaking, September is the worst month in the stock market for the S&P 500. And fast forward a little bit, it's been a disaster, right? You guys remember when I made that video, we discussed how overall, I believe, over the past 70 years, the returns for the S&P 500 in September have been about 0.5% in the red on average. And let me tell you what, they are way worse than 0.5% in September this month, in this year, right? So far in September, the S&P is down over 3% as of now, and we're clearly, obviously, in a downtrend. We're trading under both moving averages here on the 20-day chart, and on Friday's session, we saw a 1% red day, completely taking out the lows from the previous couple of trading days. And pulling back here on the 4-hour chart, you guys can see we're trading well below both moving averages on this time frame as well. And we're about to see a death cross where the 50 is going to cross under, most likely, the 180 SMA. And that could happen here in the next couple of days, which means there could be more red in store for us. And at this point in time, I mean, you could argue, yes, the S&P is still in an uptrend, which I guess it technically is. But if we start taking out 438, 435, going under those levels, which, mind you guys, 435 was the low in the middle of August. If we start breaking those levels, then the uptrend is slowly going to be breaking as well. And that could lead to an even bigger sell-off in the markets. And on top of that, we have the Federal Reserve meeting this week, which is going to start on Tuesday. It's a 2-day policy meeting. Fed policymakers have signaled that they will vote in favor of tapering bond buys starting sometime before the end of the year. So we're going to get more clarity around that this week. In the September Fed meeting, we're going to have the Q&A with good old Mr. Jerome Powell, the Federal Reserve Chairman, and we're going to learn more about interest rates, again, the bond program, what they're looking to do there, jobs, the labor market, his thoughts on inflation. So this is going to really move the markets, and if things go sour at that Fed meeting, the markets could go even lower. So keep that in mind. And this is why I always have a good amount of cash, sometimes more cash than other times, obviously. But I always think having at least a little bit of cash around at all times is a good idea, considering the markets sell off from time to time, guys. It's not going to be uphill forever. We're going to see the ebbs and flows of the markets, the ups and downs. And now we're in a down phase where it's good to have some cash so we can buy some stocks during these red times. So what do you guys think? Let me know in the comments down below. And it's pretty much the same analysis for QQQ, which tracks the NASDAQ 100. The only thing that's a bit different is QQQ isn't much lower, or rather it isn't as far under the moving averages on this 4-hour chart as SPY is. You know, QQQ is right around that 180 SMA. It's trying to fight and hold above that point or break back over it now as it's slightly under it. And we notice it's holding above 372, which was that low point from the end of August. And let me tell you guys, it is holding on to that point by a thread. So the second we break 372, this could start pushing 360, 365, I'd say that is a general area of where we could start going, considering 360 was the low from the middle towards the end of August. So that is another big, I'd say, the next main support coming up for QQQ. So again, let me know your thoughts down below in the comments, and if you all are enjoying the video, smash that like button. As always, it really helps me out. It shows you guys that you do, or rather it shows me that you guys do like the content, and I appreciate all of you out there for being here. So this week we do have some pretty big, important companies reporting earnings. Number one is Adobe, ticker symbol ADBE. This company, or rather, shall I say, the stock, went down $10 on Friday, down 1.6%, which makes sense considering we have the S&P down 1%, the Dow went down 0.5%, NASDAQ 100 over 1%. So it makes sense that Adobe went down as well. I mean, not many stocks that are large caps went up on Friday. And at this point in time, we're seeing clear resistance at about between 660 and 670 on this stock. We failed breaking out of there pretty much for the past month, ever since the 20th to the 24th of August. That's where we've been struggling, about 660, 670, even up until last week, you know. So at this point, with earnings coming up on the 21st, that being Tuesday, and Adobe's still on an uptrend, guys, in an uptrend on this 4-hour chart. With earnings coming up, we have to watch this stock, right? We have to watch this stock. If it starts selling down, maybe back towards that 180 moving average, which is where we were last week, 630, 640, if we start going back down there, maybe we do get some buyers trying to hold this thing above that 180 moving average, you know, because that has been the point where buyers have stepped in over the past couple of months during all of the sell-offs that Adobe has seen. So if we do get buyers stepping in around there, I wouldn't be surprised if we did see a short-term pop, and that is where we could make some money as traders. But the second we start breaking under that moving average, we're probably going to go 615, 620, maybe even lower into the 600s at that point in time, which are levels that we haven't been at since July, a little bit in June as well. So keep that in mind for Adobe. And I just realized the futures market just opened literally a minute ago. And by the way, that opens up, the futures market, that is, every Sunday at 6 p.m. Eastern Standard Time. And the futures are not green. They're actually red. We have the S&P down 0.2%. You guys can see that right here. S&P futures are down about 8 points right now. NASDAQ 100 futures are down about 20 points, down 0.1%. We have the Dow futures down 0.2%, down about, let's see here, 66 points. So it looks like the red from Friday as of now, and this could change. It does all the time, guys, and by that I mean the futures could flip-flop. They could be green tomorrow, but as of now, they are red, continuing the pain from Friday. So we'll look at these again, hopefully, if I remember at the end of this video, to see where they are trading at. But stock number 2 is FedEx. This, along with UPS, they've been crushed, guys. FedEx is down from $320. Now it's trading at $255. It's in a bear market now. It's down about 20% from that all-time high from the beginning of June, late May as well. And 20% drop on a company like FedEx, I think now is the time. I'm not telling you guys to buy. As always, I'm not telling you guys to buy. But now is the time to start looking deeper into the valuation. Is it worth it? And I haven't done that myself, to be honest. So I can't tell you if it's worth it here. But when a big, large cap, blue chip stock drops 20+%, you got to look deeper into it to see if the market is mispricing it, if it's correctly priced, and if the market's mispricing it, there you can find a long-term opportunity, right, if that makes any sense. But in this case, we're going to talk a little bit about it when it comes to a trading perspective, from a trading perspective, and with earnings coming up here on the 21st, same as Adobe being on Tuesday. So on the 4-hour chart, we're down 20%. Like I said, clearly in a bear market. We're downtrending. We've been downtrending ever since the end of May, so almost 4 months now. 1/3 of the past year, we've been in a downtrend for FedEx, and it doesn't look like it wants to reverse. It doesn't. I mean, it's clearly under both moving averages, but if you peel back the layers a bit and look on the yearly chart and on the 3-year chart, you start to see that FedEx is still in an uptrend overall. And the 3-year chart here shows us that we're trading well under the 50 moving average, and it could be there could be more red based on what I'm seeing here. Down to about 230, 235, which was support in the beginning of this year, January 2021. And if we start getting down there, guys, about 20, 25 bucks lower from where we are now, maybe more towards that 180 moving average on this 3-year chart, that is where I think buyers could start stepping in. Heck, maybe they start stepping in where we are right now, if earnings are good, if they do well with EPS, revenue, guidance, all that good stuff. And the 20-year chart here, I don't really look at 20-year charts too much, but this is telling me something here, right? We're still pretty overextended above both moving averages. I'm not thinking it's going to go down under 200. It could, but maybe it starts going to 215 on the lowest end, right? That is where I think, worst case scenario, 50 SMA, 20-year chart, that is where FedEx could be going. But another thing that I'm seeing here is we're right by a recent high. And by recent, I mean 2017, 2018, which isn't that recent. That was about 3-4 years ago. But if you look at this chart, we topped off at about 255, 250 back in 2017, 2018. So if the technicals play out like I think they could, and we hold 255, right? Old resistance, new support. This could be where buyers step in to start pushing it higher. And another angle that you can look at this from is FedEx more valuable now than it was in 2017? I would think yes. So, with higher revenues, higher earnings, now compared to 2017 where it was the same stock price, I think there's more value in the 255 stock price today than a 255 stock price in 2017, if that makes any sense. In other words, it was probably overvalued, more overvalued in 2017 at 255 than it is today at 255. Hence why it saw a major correction from 255 2017-18 down to about $100 after the COVID crash. So that was a 60% correction, and that was much needed. It wasn't even a correction. That was a complete crash. So we're going to be watching FedEx. Stitch Fix is another one that I'm personally looking at, SFIX. This is definitely more speculative. Not my favorite setup, but I'm looking at it because they report earnings on Tuesday as well, the 21st of September. And clearly we're seeing a downtrend. Lower lows, lower highs, all that stuff. Trading under the moving averages, death cross. We're seeing everything here. But it did do well on Friday. It went up 4%. And I believe we saw a lot of small caps do pretty well on Friday. And I believe Stitch Fix, the market cap can't be over $10 billion on that. It's got to be small. And I could be wrong on that, but I'm going to look at it right now on my Yahoo Finance. Give me a second, guys. Yeah, it's $4 billion market cap. So it's a smaller company for sure. And these companies tend to do well even if the markets are moving up or down, whether the markets are moving up or down, as opposed to the large cap stocks, which are more, they swing more based on what the markets are doing, if that makes any sense. Hence why we saw Virgin Galactic up a ton on Friday when the markets got squashed, because Virgin Galactic kind of moves wherever it wants to go, whenever it wants to go, where it wants to go, you know what I mean? Because it's a smaller cap stock, more speculative, and I would put Stitch Fix in that category as well. So at this point in time, I want to see if it starts breaking out of the 50 SMA here on the 4-hour chart, which is at about 36, 37, 38 bucks. I'm going to put my alert at $37 per share right now. Nike is another one, which, if you guys remember, this company did very well last time they reported. They crushed the earnings, guys. I mean, I remember that day after hours, I was looking at Nike stock and my jaw dropped. I think it went up like 15% after hours, which was crazy. And you guys can see here for yourselves, it did. It went from 130 roughly to about 153, 155, which is about a 13-15% move there. And I didn't think it was going to go higher, but I was proven wrong. I mean, it went to 154, and that was after earnings, by the way. And then it went all the way up to 174. It had pretty much a 2-month rip from after earnings to that all-time high, excuse me, guys, at $174 per share. And once it hit that point, and you guys can see here for yourselves, give me a second, let me take a sip of water. Once it saw that all-time high hit, beginning of August, it started cooling off a bit. Profit taking, weak hands being shaken out, all that good stuff, which makes sense considering it went up from 128 in the middle of June all the way to 174 beginning of August, 1.5 months. It went up almost 30%. So that makes sense. And now it's down about $20 from 174 to 156. It's in correction territory. It's down over 10%. We're seeing it's downtrending in the past month and a half. We're seeing the death cross. And with earnings coming up on the 23rd here, this is a must watch. And the 4-hour chart doesn't look so great, but once you start peeling back the layers, the 3-year chart looks decent, and yes, it shows that there could be a little bit more downside, maybe towards that 50 SMA here at about 145, 140, and now we're trading at 156, so it could go down another $5, maybe $10, but I don't think it's going to go down much more than that. You know, I think buyers will ultimately start stepping in here on Nike, whether it's from 140 to 150, that $10 window. That is where I think they will start piling in. So keep your eyes out on Nike, guys. If you do have a bit of a longer time horizon, you know, you have a couple of months, you want to put some money to work, and I'm not telling you what to do, but in my opinion, Nike could be a pretty decent spot to look at. And you all know I don't really buy stocks before earnings and gamble on earnings. That's not my style. I don't like doing that. So hopefully they don't have a great earnings report, or it's a decent report and the stock drops 5-10%. So I could maybe start building a little swing position there if it's an overreaction to the earnings report and it goes down. You know, that could be an opportunity. So watch out for Nike. Costco, COST is another one that I'm looking at. This one is pretty much at all-time highs. I mean, it's at 459, all-time highs being 469, so it's $10 under the all-time high, with earnings coming up here on the 23rd being this Thursday. This, in my opinion, if it dips down a little bit more, 440, 445, right by that 180 moving average on the 4-hour chart, that could end up being a decent pickup. But as of now, with it being very close to all-time highs, I'm not necessarily looking to rush into this. But if we get an overreaction, kind of like with Nike, and the stock goes down on decent earnings, maybe it drops $10-15, then maybe we could get in it as an overreaction play. But as of now, I'm just keeping Costco on the watch list. Rite Aid is another one, ticker symbol RAD. They have earnings on the 23rd, Thursday as well, same as Nike and Costco. And this is a stock that I'm starting to think could catch on fire, guys, considering it's been moving above the moving averages. It's been reversing the past roughly month at this point, ever since the 20th of August. You guys can see we broke out at about 1550, made a move to 19. Now we've cooled off a bit. We're at the mid 17 level. We're still moving above the main 180 moving average. We're noticing a golden cross. Now I just want to see a move back over the 50 moving average. And you guys can see on the 20-day chart, if I draw out this channel tool here, let me show you all. Let's see here. There we go. We've been in a downtrend since the beginning of September, which correlates with the overall markets downtrending since the beginning of September. So if we start getting out of this downtrend on the 1 hour chart here, that's going to really constitute a breakout, in my opinion, on the 4 hour chart, probably back up towards that $19-20 plus level to the point where from there we probably could go 20-22 per share, 23 even, which is where we were at in the end of May, early June. So watch out for Rite Aid. And the last one that I'm looking at for this week, and I do enjoy many of the restaurants that this company owns. DRI, Darden Restaurants. Earnings for this company are on the 23rd, same as the last 3 stocks that we just talked about. And if you guys don't know Darden Restaurants, this is the company that owns Olive Garden, which I go to sometimes. I used to go there a lot with my family as a kid. Yard House, which I go to a lot now as an adult. I'm there at least once a week, guys. I mean, I give this company so much money, I might as well invest in Darden. You know, I go to Yard House all the time, get some drinks, some food. I love the wings there. You know, I watch the football games, the playoffs for basketball. I love that place. Capitol Grill, a little bit more fancy. You know, I've been there like once or twice, I think. Longhorn Steakhouse, I haven't been there. I don't think I've ever been there, to be honest. Bahama Breeze, I've been there a couple times, and there's more restaurants. So Darden, the earnings shall be interesting. You know, with COVID, the cases rising, Delta, you know, people, and the truth is, I don't even know if people are scared to go to restaurants anymore. Everywhere I go in Jersey, guys, it's kind of like life is normal now. I mean, I don't know. That's kind of why I'm interested in seeing these numbers. You know, are people are going out, I think. I really do. You know, I was watching the games earlier for the NFL. Every stadium's packed. I feel like people are starting to move on a little bit. You know, CV, people understand that it's here. It's here to stay. I mean, it's going to be a seasonal thing, I believe, every single year, and they're starting to understand that. And, you know, more people are getting the vaccine, so I don't know. I feel like people are starting to get back to normal life. They're trying to, and we'll see if the earnings from Darden Restaurants reflect that. And if we start breaking out, I mean, we already are breaking out above the moving averages, but if we start taking out 150, 155, start breaking out of there, this could be a big mover. So those are the stocks for this week, guys. Adobe, FedEx, Stitch Fix, Nike, Costco, RAD, or Rite Aid, and DRI. And let's see, what are the, oh, wow. The futures are not doing well. They're worse. Way worse, actually. S&P futures down 0.3% right now. Dow futures down 0.3% as well. Oh, man, this is getting ugly. The NASDAQ futures are down 0.2%. What's gold doing? Gold's up. Silver's down 0.9%. Jeez, guys, silver has just been destroyed these past couple of months. From 28 an ounce back in May, now it's 22. Silver's down 25%. So if you're interested in silver, I guess now is another chance for you to pick up some coins, some stocks. I don't know, but it's not looking pretty out there, guys. You got to get ready. The Fed meeting is going to be important this week. So if you all enjoyed the video, hit the like button, drop me a comment, subscribe, hit that notification bell while you're at it as well, and check out my Patreon if you guys want my real-time buys, sells, call-outs, morning update videos, trades I'm making, options moves I'm making, long-term investments I'm making, and I make a morning update video every single day for the top tier patrons. All of that's linked down below, or you guys can go to stocksurfest.com/Patreon. Make sure to also get your $30 from M1 Finance or 2 stocks from Webull. Those are linked down below. And that's it. I'll catch you all in the next video. Thanks for watching. Keep crushing the markets. Stay safe out there, guys. Peace out. And oh, by the way, I'll pop a video up here. Check it out. Webull options. Go watch that. Peace out, guys.